there's three major ones that Movement Mortgage offer. Is one, conventional home style loan.
Okay.
So it's a conventional product. The next is an FHA 203K loan.
Okay.
And then Movement Mortgage just released a VA renovation loan.
Mm-hmm.
It's only specific to single-family properties for the VA loan.
Okay.
Whereas the other two, the conventional and FHA, you can do multifamilies. As far as like mortgage insurance and like refinancing and stuff, a lot of people decide to purchase a property if we can get it at a good price, starting price, and then they can factor in all the improvements that they want to get done to the house, and then they get done with it within a couple of years, months, 12 months, 24 months. It would be nice to reappraise the house after it's been improved, because now you have all that sweat equity into the house.
Absolutely.
And it might be, all right, so it was a $50,000 renovation, but maybe you got like 75 grand in equity because it's all done now, and it's brand new. People want to pay for, are willing to pay the price for newest stuff. So, you can get rid of mortgage insurance if you possibly. It's a good option depending on how well you did with the renovation. But you can look into it a refinance to get rid of the mortgage insurance instead of putting all the money down and using the equity to get rid of the MI instead of putting all the cash down when you originally purchased the house. So, say you buy a house at 150.
Okay.
So you buy the house at 150. It needs new kitchen, bathroom, and mechanicals. So we're looking at a $50,000 renovation.
Sure.
So we come to an agreement with the seller on what you're willing to give them for the house as is, and then we talk to a contractor about how much it's going to take to get all the items that you want completed done through the renovation.
Yep.
So it comes back and says, okay, Mr. Bates, it's going to be $50,000. We go, okay, we're going to add that to the 150. So the house your loan starts at $150 plus $50,000 in renovation.
Okay.
The down payment comes off of the summation of that number, so $200,000.
Okay. Yep.
If you're doing an FHA loan, that's 3.5%, $7,000.
Okay.
And then we close on the house once we go through the proper appraisal requirements to show that and make sure that the house is going to be worth what you're putting into it when the renovation gets done.
Makes sense.
And then after that all passes and the appraisal comes back clean, if there is anything that needs to be fixed on the appraisal, we handle it then, and then we close. But more often than not, they come back pretty clean. Appraisal's clean, we close. The seller walks away with the 150, and then we have the other $50,000 we put that into an escrow account. So there's a specific draw specialist that works for Movement Mortgage that works with the contractor to make sure that specific dates that were agreed upon are met.
Yep.
Also that the work is required. The work that was said was going to be done is done and it's completed to the liking of the buyer and for the bank.
Interesting.
We re-inspect the property to make sure it's up to standards.
Time frame to close. What is that?
Well, with our upfront underwriting,
Yep.
It puts a position for the customer into a position where they can take on a renovation loan because all the homework is out of the way from the beginning. And honestly, when someone comes in to get pre-approved, they don't come in to get pre-approved for a renovation loan. They come in to just get a mortgage, and then they go out and they find a house that needs a renovation loan. So it's like we do a really good job so that way, in case that happens, where they go out and then they need to incorporate a renovation loan, we already have the major part of the mortgage out of the way. So as far as a competitive standpoint, as far as speed is concerned, we can really take on that task without delaying any sort of closing or anything like that.